They laughed when it was trading under 20 cents, but what if this stock hits $3 or even $5 by 2030? That's the kind of question shaking up the markets right now, because a once forgotten laser company just made a move that could change everything. Imagine this: a company that most traders had written off, barely trading above a few cents, suddenly explodes more than 300% in just days. The reason? A shift so bold that it's making even defense insiders raise their eyebrows. We're talking about Nuburu, ticker symbol BURU, a once forgotten laser company that's now turning its sights toward national defense, military contracts, and cutting edge blue laser technology. But here's the real question: is this the beginning of a massive turnaround, or just another penny stock hype that fades as fast as it came? Stay tuned, because by the end of this video, you'll understand exactly what's driving this insane move and where this stock could realistically go next. Nuburu isn't new to the laser world. Founded in 2015 in Colorado, the company built its name on high-power blue lasers, a technology very different from the typical red or infrared lasers we're used to hearing about. Blue lasers operate on a much shorter wavelength, which means they can weld and process metals like copper and aluminum faster and cleaner. It's the kind of tech that industries like EV manufacturing, aerospace, and advanced batteries have been chasing. But despite all that promise, the business just couldn't scale. According to reports, Nuburu was only pulling in about $49,000 in quarterly revenue while losing millions. Investors started walking away, and by early 2025, the company was close to running out of cash. Things got so bad that Nuburu had to transfer its core patents, basically the heart of its business, to creditors as part of a restructuring deal. For most companies, that would have been game over, but Nuburu didn't fold. Instead, it went for one of the boldest pivots we've seen this year, moving from industrial lasers into the world of defense and security. In mid-2025, the company announced a brand new division called Nuburu Defense LLC, signaling that it was ready to enter the billion-dollar defense market. That one move flipped the story from bankrupt tech to potential defense innovator. Then came the acquisitions that lit up retail investors. Nuburu secured global rights to Orbit SRL, an Italian company specializing in crisis management and security software for defense applications. And they didn't stop there. They planned to fully acquire Orbit. Next was Techni SPA, another Italian firm that makes defense vehicles and tactical electronics, already doing business with governments, including a recent deal in Bangladesh. On top of that, Nuburu hinted at acquiring a third photonics R&D firm, expanding their footprint in defense-grade laser technology. To handle this rapid transformation, Nuburu appointed two co-CEOs, Alessandro Zamboni and Dario Barassoni, effective October 1, 2025, bringing together laser tech and defense leadership. Their goal? To turn Nuburu into a next-generation defense hub combining photonics, hardware, and software under one roof. And that's when the stock went parabolic. BURU exploded more than 300% within days. Trading volume shot up from thousands to tens of millions. Social media went crazy. BURU was suddenly trending on Reddit, StockTwits, and FinTwit. Retail traders were calling it the next Palantir, while others saw it as another speculative run. But one thing was clear: everyone was watching. Now, let's cut the hype and look at what's really going on. Financially, Nuburu is still in rough shape. The company's revenue is small, its expenses are high, and it's heavily dependent on raising capital. Dilution is a serious risk. Every new share issued lowers the value for existing shareholders. On top of that, its core intellectual property is still held by creditors, not fully under company control. Unless they fix that, there's a limit to how much value they can truly unlock. Execution risk is another major factor. Integrating multiple international companies, managing regulatory hurdles, and running defense operations across borders is no small task, especially for a micro-cap company that was near collapse a few months ago. And with two CEOs, execution and coordination need to be flawless. That said, if they do manage to pull this off, if the acquisitions close smoothly, the defense contracts come in, and the company rebuilds its balance sheet, this could be a huge comeback story. Projections already suggest potential quarterly revenue around $500,000 by Q4 2025, which, while still small, would show real progress. Now let's talk about what everyone really wants to know, the future price potential. Let's be clear, these are not guarantees, but possible scenarios based on how the company performs. If Nuburu manages to execute moderately well, say integrate its acquisitions and stabilize its finances, then in the base case, BURU could trade between $0.50 and $1 over the next year. If things go better than expected, the defense pivot gains traction, government contracts start rolling in, and investor sentiment stays bullish, then the bull case puts BURU around $1.50 to $2 within the next 2 years. And if we're talking about a dream scenario, where Nuburu scales globally, expands defense operations, and becomes a legit name in photonics-based military tech, then by 2030, some projections suggest this could reach anywhere between $3 and $5 per share. Now, obviously, these upper targets are ambitious. They depend on successful contract execution, financial growth, and strong partnerships with major defense players. But adding that kind of long-term vision keeps investors interested and sets a clear roadmap for where the company could go. At the same time, traders need to remember that BURU is still an ultra-volatile penny stock. We've seen daily swings of 30–40%, and that won't stop anytime soon. There's no institutional coverage yet and no guarantee of profitability. That's why this stock falls into the high-risk, high-reward category. So, should you buy it? That depends entirely on your risk tolerance. For traders looking for fast momentum, BURU is already proving it can move big. For long-term investors, the real question is whether this defense pivot becomes something tangible. Because if it does, the upside could be enormous. But if the acquisitions stall, contracts fall through, or the company continues burning cash without revenue growth, then even $0.20 could look expensive. At the end of the day, Nuburu's blue laser revolution is one of the most interesting transformations happening right now in the small-cap market. From a failing industrial company to a possible defense tech contender, it's the kind of underdog story that investors love. So what do you think? Could BURU actually hit $2 next, or even $5 by 2030? Or is this just another hype wave waiting to crash? Drop your predictions in the comments. I'll be reading them all, and if you enjoyed this breakdown, hit that like button, subscribe, and turn on notifications so you don't miss the next update on this wild stock. Disclaimer: this video is for informational and educational purposes only. It's not financial advice. Always do your own research before making any investment decisions.